Hello traders, welcome back. Today I'm going to share how I trade and how I approach the markets. If you find it useful or even useless, that's completely fine. I'm sharing this because if someone is going through the same struggles and this video happens to reach them, it might help them learn something valuable. I'm just explaining my basic trading style here. If you want anything specific about this, you can tell me and I'll make separate videos on those topics. This video is about my experience and the trading style I discovered along my journey that truly fits my personality. So let's get straight into it. First, I'll explain the concepts I use. I work only with 15-minute liquidity levels along with the new week opening gap. I use these to find my points of interest. Second, I use order blocks, fair value gaps, inverse fair value gaps, market structure shifts, change in state of delivery, breaker blocks, and the matrix. I use these for precise entry points. Third, I trade only in sync with time, mostly during the London macro. I use time to identify key liquidity raids and high probability moves. Finally, I use standard deviation, Fibonacci, and premium discount tools for target selection and stop placement. And the most important part of my entire trading approach is built around reading price delivery, understanding how the market wants to move, and identifying signatures that confirm intent. So now it's time to hop onto the charts and look at some examples. Moving on to the charts, we have a clear swing high, so I'm marking that out as my buy side liquidity. Then I mark this swing low as my sell side liquidity. Here's what I do next. I use the premium and discount tool on the entire range, and I look for PD arrays that sit at or below the 0.5 level for targets. I never aim for the entire opposing side liquidity because most of the time price reverses before fully taking those extremes. After that, I mark out my key time windows, those sessions where high probability liquidity raids typically happen. Now you can see that the market has swept my buy side liquidity, so I drop down to the 1 minute time frame to hunt for entries. Here, an order block forms. Many ICT traders misunderstand this. They believe a change in state of delivery only forms when two or more candles overlap, but it can form even with a single candle. Whenever that happens, it creates an ICT order block. We also have an IFVG. I wait for price to retrace back into that IFVG. Once price trades back into it, I enter short, placing my stop above the high. For my target, I'm looking at this 1 minute low. This is my minor sell side liquidity, and that's where I'm setting my take profit. Now notice, we get a market structure shift. The IFVG has already been rebalanced, so from a price delivery perspective, there's no real reason for price to return to that high. I move my stop down to that adjusted high. To the left, we also have a breaker block. If price retraces into the breaker, I take a second position using the same stop and the same target, the sell side liquidity. And you might wonder why I take another trade. The answer is simple. When we have a clear market structure shift, multiple fair value gaps, and a breaker, there is no logical reason for price to come back to my stop. That's how price delivery works. Next, we get another change in state of delivery, which forms another order block. Price taps the order block and moves cleanly toward the target. This is how smooth price behaves when you understand how it reacts around your levels. You can clearly see on the chart how price respected every single level. The market also reached the order block I marked. And just to be clear, I called this move to happen 7 hours before it actually happened. You can check the screenshots with executions. This example was also delivered on the Telegram and Discord server 5 hours before it happened. First, I start by applying the premium and discount model on the entire range. Then I shift down to the lower time frame where I can clearly see an order block, so I mark it out. There's also a breaker block in the same range, so I mark that as well. Like before, I apply the premium and discount tool again on the current range and identify the PD array that sits at or below the discount level. After that, I mark out my key time for high probability movement. Now price taps the order block and also sweeps a minor buy-side liquidity. Before taking any entry, I go up to the 15-minute time frame and mark my matrix to understand how far price can push up before reversing. You can see this 15-minute candle right here, so I set the matrix on this candle's wick and mark it. Now I drop back down to the 1-minute time frame. I can see a fair value gap, but since the matrix level hasn't been retraced yet, I wait to see how price reacts around this FVG. Price then invalidates the lower matrix level and taps into the upper quadrants of the matrix. Now we have a change in state of delivery. A CISD also creates an ICT order block. I take a short entry here and place my stop above the high. For the target, I need the most efficient level, and that's this unfilled fair value gap. It hasn't been retraced yet, so I mark it as my primary target. We also know the order block hasn't been mitigated yet, so it's very likely price will return to mitigate it. Price does exactly that, and at the same time it taps the 0.75 level of the matrix. That's how precise the matrix is. Once a quadrant gets tapped, price doesn't usually revisit it. Now we get another change in state of delivery. Then we get a market structure shift. At this point, I don't see any reason for price to return back to my entry, so I move my stop to break even. Why? Because look at this last high. The low before that high becomes our breaker block. Price retraces into the breaker block, specifically into its consequent encroachment, and sweeps a minor buy-side liquidity at the same time. That tells me to expect another market structure shift to the downside. We get that shift, so I move my stop to the most recent high formed after the sweep at the breaker. Price retraces to the breaker once more and then drives cleanly into our target. After that, the order block I marked also gets fully mitigated. That's what I do. I manage every trade based on what price signatures are telling me. I trust my observations and my ability to read price. If you can't read price, you can use every ICT model and chart pattern in the world, but you'll still struggle until you understand delivery. So, thanks for watching. If you want to take your learning a step further, you're welcome to join my Telegram and Discord communities. Inside, you'll get daily market overviews, deeper insights, and a supportive group of traders who are on the same journey. And if you ever face any struggles or feel stuck at any point, you can always talk to me personally. I'm there to help you out. For those who want a more personalized, focused experience, I also offer one-to-one mentorship. If that's something you're looking for, just drop me a message on Discord and we'll take it from there.